Hello and welcome to our market alert video for today, Friday the 13th, 2023. And thank you for watching this video. We're going to update you on where we are. We got some data on inflation and the market barely reacted to it, which was kind of interesting because some of the biggest up or down days have been when the inflation data has been announced. And so kind of an interesting situation going on right now. I want to dive right into it with you. But first, I want to share a trick that I've learned from my grandson. So he's 16 months old and he can't talk yet. But he's figured out that if you go, everybody goes, what? What do you want? And everybody starts looking where he's pointing. You want this? You want this? You want this cup? You want the sandwich? You want this? So if you want to be a leader, just learn how to point. The moment you point, you just point in different directions and everybody starts looking. And it's a new leadership skill I've learned. Anyway, let's talk about what's going on. I'm entitling this video, What is going to drive the market? And we've been talking about that for the last couple of weeks since the year started. And what we're looking at is, and we've said this for many, many years, and that is that what drives stock prices is not inflation, it's not recessions, it's not the Federal Reserve driving interest rates up or down, it's none of that. What drives the stock market, in our view, is profits. If companies are making money, their stock prices tend to go up. If they're losing money, their stock prices tend to go down. I'll give you an example. Let's say we have an absolutely horrible economy, high inflation, bad recession, the Fed's raising interest rates, unemployment, everything's going terribly, but yet one of the company has figured out how to make a lot of money during that period. Guess what's going to happen to their stock price? Probably it's going to go way up. The reverse is also true. Suppose we have a fantastic economy, no recession, no high interest rates, no inflation, everything's great, but we have a company that's losing money hand over fist. What's going to happen to their stock price? Probably it's going to go down quite a bit. So it's profits that drive stock prices. And in the aggregate, it's what drives the stock market. So right now, what we have is a situation where companies are anticipating the inflation that we think we have right now. Companies are anticipating the recession that will come because of the inflation and because of the Fed raising interest rates that we know right now. So therefore, what they're doing, since it's like the most telegraphed recession in the history of recessions in our view. Okay, I mean, we've been talking about this recession for a long time now. So companies are bracing for it. What they're doing is they are protecting their margins. What they're doing is they're cutting costs. They're laying people off. Amazon's laying off 14 or 18,000 people. FedEx is doing the same. Apple, all these companies, the banks, they're laying people off. They're cutting costs. Why? They want to protect their profits. And if they are able to do that, if they're able to protect their profits, then the effect of all this inflation, all this recession, all the Fed doings will be muted when it comes to the market. So right now, we're still in our posture of protection is better than risk. We still see that the downside risk is still significant enough that we're counseling our clients to still stay out of stocks and bonds. And that's where we've been since April of this year. So if you're still invested, you may be taking more risk than we would think is appropriate for you. Visit with one of our retirement planners and we'll talk with you about building a retirement cash flow plan, help you decide if you have enough money to retire on. If you are retired, will your money last as long as you do? We always say we're not here to make you rich quick. We're here to keep you from becoming poor. And we want to look at that and see where you'll be in 5, 10, 15, 20 years. We'll project it out, help you to build a plan accordingly, and we'll do all of that for you at no charge or obligation. And we'll tell you if you should be in this market or not as well, and why. So our website again is RPO